Hello, and thanks for being here. If you depend on Social Security, disability benefits, a pension, or any kind of monthly income to cover your basic needs, this conversation is for you, because changes are happening that affect how your money moves and how reliable those deposits are. Before we go any further, hit the subscribe button so you don't miss regular updates, and please like and share this video so it reaches others who truly need this information. Staying informed today can save you stress, delays, and real financial problems tomorrow. What we're talking about today is critical, and it often catches people off guard because they don't realize it applies to them until a payment is delayed, reduced, or suddenly put on hold. New banking procedures are now directly touching Social Security, SSDI, SSI, pensions, and even conversations around possible stimulus or relief payments. This does not mean Social Security is ending. It does not mean your benefits are being taken away. But it does mean the way your money is processed, reviewed, and protected has changed, and those changes can affect real people in real ways, especially seniors and people living with disabilities. Over the past year, banks, federal agencies, and payment processors have quietly updated their systems to combat fraud, identity theft, and improper payments. On paper, those goals make sense. In reality, these changes have created confusion, extra verification steps, and unexpected stress for people who rely on steady monthly income to survive. Many beneficiaries have already dealt with surprise account holds, additional identity checks, or letters asking them to confirm information they were certain was already correct. At the same time, discussions around new stimulus payments, state-level relief, and pension adjustments continue to surface. Even when no stimulus has been officially approved, banks still prepare their systems for the possibility. That preparation alone can trigger additional monitoring of accounts that receive government funds. In other words, even proposals and rumors can affect how closely your account is watched. In this discussion, we're going to break down what these updated banking rules actually are, why they exist, how they affect Social Security, SSDI, SSI, pensions, and potential relief payments, and, most importantly, what you can do to protect yourself. This will be explained clearly, step by step, in plain American English, without legal jargon or scare tactics. This is especially important for older adults who rely on direct deposit, don't use online banking often, or have had the same bank account for many years. Even if you haven't changed anything, the system around you has. Let's start by clearing up confusion around the phrase, new banking rules, because it's often used in a way that causes unnecessary fear. When people hear that phrase, they often assume Congress passed a new law specifically targeting Social Security recipients. In most cases, that's not true. What's actually happening is a series of updates to existing financial regulations, federal guidance, and internal bank policies in response to increased fraud involving government payments. Fraud tied to government benefits has risen sharply in recent years. Criminals target Social Security numbers, steal identities, and redirect benefit payments. In response, regulators have pushed banks to tighten verification processes and monitor government-linked deposits more closely. One major change involves how banks flag accounts that receive federal benefits. Social Security, SSI, SSDI, VA benefits, and certain pensions are clearly identified as government payments when they arrive. Banks now use more advanced software to track patterns related to those deposits. If something looks unusual, even if it's completely innocent, the system may automatically pause a deposit until it's reviewed. Another key change involves name matching and account ownership. Banks are under pressure to make sure the name on a Social Security record matches the name on the bank account receiving the money. Differences caused by marriage, divorce, hyphenated names, or even small spelling errors can now trigger verification requests. Years ago, those mismatches were often ignored. Today, they're more likely to be flagged. There are also changes related to inactive accounts. If an account receives Social Security but has very little other activity, some banks may request confirmation that the account holder is still alive and authorized to receive payments. This doesn't mean benefits are being questioned, but it does mean more paperwork and communication may be required. Banks have also updated how they respond to government recovery requests. If Social Security later determines an overpayment occurred, banks may be instructed to freeze or return funds more quickly than before, even while an appeal is pending. These systems are not designed to punish seniors or people with disabilities, but they are automated, and automated systems don't understand personal circumstances. That's why people who have done nothing wrong can still experience stress and delays. Now let's look at how this affects Social Security and disability payments specifically. These payments are sent electronically on a predictable schedule, which makes them different from regular paychecks or transfers. With enhanced monitoring, banks may temporarily hold a deposit if they detect changes such as an address update, a new debit card request, unusual withdrawals, or even a failed online login. These things happen for harmless reasons, but the system doesn't know that automatically. For example, if you update your address with Social Security but forget to update it with your bank, that mismatch can trigger a review. If a caregiver starts helping with finances and accesses the account more often, that can look unusual. Even switching from paper statements to online statements can sometimes prompt an internal check. SSI recipients may face additional scrutiny because SSI is needs-based. Banks are cautious when balances fluctuate above certain thresholds. A one-time deposit like back pay, a tax refund, or a family gift can raise questions. Disability beneficiaries may also see flags if they receive short-term income related to vocational programs. Banks aren't judging eligibility, but they do report unusual activity that may later be reviewed. Joint accounts add another layer. Many seniors share accounts with spouses or adult children. While legal and common, joint accounts require banks to confirm that the primary beneficiary still controls the funds. All of this means that even if your benefit amount doesn't change, access to your money could be delayed. Stimulus and relief discussions also play a role. During past stimulus rounds, banks were overwhelmed by deposits and fraud attempts. They've since tightened systems. If future relief is announced, monitoring will likely increase again. Banks don't decide who gets stimulus money, but they may temporarily freeze funds if something doesn't look right. Pensions are affected too. Public pensions are often processed similarly to Social Security. If you receive both into the same account, your account is clearly categorized as benefits-related, which comes with extra oversight. Changing banks, opening a new account, or updating direct deposit now triggers more verification than it used to. Closing an old account too soon can cause payments to bounce and create delays. The best protection is consistency. Make sure your name, address, and contact details match across Social Security, your bank, and any pension provider. Review statements regularly. Respond promptly if your bank contacts you. Keep records of conversations. Consider having a small backup plan in case of short delays. The most important takeaway is this: your benefits are not disappearing, but the systems delivering them are changing. Staying informed and prepared helps you stay in control. These payments are not just numbers. They pay for food, housing, medicine, and dignity. Understanding how the system works protects your peace of mind and your future.